You've said that you're still not providing financial guidance at this time. Why are you not able to provide that for the market halfway through the year?
Well, good morning, Naira. You see as well as I do that the volatility is still quite high on the markets at this point in time. The visibility that we have for Q3 and especially the month of September, which is a very important month in the quarter, is not good. I mean, we don't know what's going to happen. We see the rate of infection in the countries going back up. Are those countries going to proceed to further lockdowns? We don't know. So it's very difficult at this point in time to give a guidance. So we're cautious on the guidance and how we see the markets. On the other hand, we're very optimistic because we've been able to adapt in Q1 and Q2 to deliver a solid performance in an uncertain world. We see also some stimuli from governments that are very positive for us, namely the Green Deal in Europe is targeting some of the key investment grounds where we are focusing, like climate change, food security, circularity, safety and security, and health and well-being. So cautious but optimistic for the upcoming month.
Cautious but optimistic. Eric, I know you're not giving financial guidance, but internally you must have some kind of base case for the rest of the year on which you're basing your business operations. Some companies have come out, for example, and said that their guidance is based on the fact that they're not expecting further lockdowns or a second wave. Is that your base case? No further lockdowns as a result of a second wave in coronavirus?
Well, we have put aside the target mechanisms that we had the previous years, and we go through what we call quarterly forecast, internally for the teams. So if you look at the performance in Q2, so in Q2, our number one priority was the protection of our human capital, not only the physical health of our people, where we implemented very successful measures worldwide on all the sites where we operate, but also mental and psychological health, where we kept the team together with a high level of motivation. We didn't lay off because of the COVID-19 situation, and we recorded our highest ever employee net promoter score, which is the index measuring employee satisfaction. At the same time, this helped us to be very agile and adapt to the situation to report strong financials. Despite a decline of 25% in our revenues, we are maintaining our operating margin at the same level of last year at 9%, and we generated 10.8% of sales in free cash flow, which is 37 million more than the previous year. So at the end of the day, yes, we have this mechanism that help us to protect our human capital and generate good financial results.
Yeah, so where are the challenges then, Eric? Are they on the supply side? Are you seeing challenges in customer demand in certain geographies?
In Q1, 30% of the shortfall was due to supply, 70% to demand. In Q2, it's only 2% linked to supply and 98% due to demand. So we've been able to completely reorganize our supply chain, which is running today very well. The only issue that we have is, like many companies on the planet at this point in time, is demand. And we've seen big shortfall of demands in some countries of Asia, like India, the ASEAN countries, also countries in Europe, like France, Spain, Italy, and UK. But, we have to face the situation that we have in front of us. And I think more than ever today, adaptation is also the key word, adaptation and agility. And this is why we're not giving any specific guidance, because we need to adapt quarter after quarter to the situation that we're facing, which is quite volatile.
Yeah, that's really interesting, the shift from Q1 to Q2 from supply concerns to demand concerns. On adaptability and potential changes in the business, Eric, you have an ultraviolet light that you're working on that can degrade coronavirus in a matter of seconds. Talk to me a little bit about how big a part of your business this is becoming. Can you put any numbers on it? Is it going to become a bigger part of the overall business as the pandemic develops?
Well, it is growing very fast because it is a preventive measure. So it doesn't cure, but it prevents. It keeps spaces, the air, surfaces, objects clean of viruses. And we have worked with the Boston University in order to prove scientifically that it does have an impact on the virus that causes COVID-19, and it eradicates it, as you said, Neera, in a matter of seconds. So what we've done lately, we've multiplied our production capacity by 8, or we have a plan to multiply it by 8. We'll have a first step in September and a second step at the end of the year, and we would have at the beginning of 2021 a capacity which had been multiplied by a factor 8. We also bringing to the market new offers, and we have 12 new families of products that are going to be brought to the market before the end of the year, while at the same time we also acquired a company that is specialized in upper air disinfection, which is offers that we didn't have. So we bought that company to be able to acquire these offers, and now we are developing them worldwide. But we see a very high level of traction on that business since the start of the crisis. Now, it's a known technology that we've been implementing for 35 years, but we're already now developing it very, very fast worldwide, where we see needs in every country.
You mentioned that you acquired a company to progress with these business moves, Eric. Do you see yourself making more acquisitions, whether big or bolt-on, in order to capitalize on the business moves that you're making as a result of the pandemic?
So, Neera, we've made a big acquisition last year, Cooper Lighting, and our number one priority today in terms of capital allocation is to deleverage. Now, if we see opportunities that we really have to go for, it will be, small companies and bolt-on acquisitions that we may do. But our number one priority when it comes to capital allocation is clearly to deleverage at this point in time.